that they can do equity accounting is in their group financial statements. Happy? Now, I made a summary for you on slide number 26. Let's go through that and make sure that you now understand. If I'm an investor in a joint operation and I'm not a parent, I will prepare individual financial statements. And there I'll apply the joint operation principle, being my percentage interest in assets and liabilities. Where do I get examples of this? In the group statements textbook. That is your prescribed textbook for your CTA. So you must use that textbook. I cannot rewrite all of those examples. All right. Second column, if I'm an investor in a JV and I'm not a parent, I'll be preparing individual financial statements. Do you agree? And in there, I'll apply the equity method to the investment in the joint venture. The next column, if I'm an investor in a joint operation and I am a parent, I'll be preparing separate and consolidated financial statements. Now, just one thing, separate financial statements, that is a choice, okay? So remember that the rules regarding separate financial statements will only kick in when you do decide to prepare separate financial statements. But a parent is the only party who is allowed to prepare separate financial statements. The rest of them will be individual financial statements. So I don't want to create the idea that separate financial statements are compulsory. They are a choice, but if they are prepared as separate financial statements, they have to be done in terms of IAS 27. All right, so I will apply the normal joint operation principle, my percentage interest in assets and liabilities in my separate financial statements and in my consolidated financial statements. No difference. All right, because I only have a joint operation. So you can see that the accounting of a joint operation is the same throughout. Doesn't matter whether you're a parent or not a parent or in the separate or consolidated financial statements. It's always just your percentage of the assets and liabilities that you have agreed to, that you've got rights to, that you've got obligations for. All right? Then the one on the right-hand side, the investor in a joint venture that is a parent. In my separate financial statements, if I choose to do so, I must do in terms of IAS 27 then. I will apply IAS 27 and I will measure the investment in the JV at cost or at fair value. Okay, are you happy still? And then when I prepare my consolidated financial statements, I will apply the equity method in terms of the investment in the JV. Guys, can you now understand why even for subsidiaries, investments in subsidiaries, investments in associates, and investments in joint ventures in the separate books of the parent are usually measured either at cost or at fair value. Do you agree? And if you look at the parent's books and you see that the parent has actually recorded fair value adjustments on the investment in the sub, the investment in the associate, or the investment in the joint venture, then what must you do? You realize those fair value adjustments are recorded in the mark-to-market reserve of the parent. Do you agree? And that's normally your first pro forma journal entry, because those fair value adjustments are reversed in the consolidated financial statements. Because to measure those investments in subsidiaries, associates, and JVs at cost or at fair value can only happen in the separate books. You with me? So if they are at fair value is not allowed in the group or the consolidated financial statements. So the first thing that you're going to have to do will be to reverse the fair value adjustments at group level and the corresponding deferred tax. And remember, those fair value adjustments will normally be subject to CGT. All right, because that's how we're going to recover the value through sale and then CGT above the base cost at 50% at this stage. We know that that's been increased to 66.67% inclusion rate times the Companies Act rate that is 28% at this stage. It's very important to make sure in study material whether the examiner has adapted to the new inclusion rate for CGT, which is 66.67%, or whether the examiner still expects you to include your capital gains only at 50% and then multiply it by 28%. I think it's likely that they are still working with 50%, but for QE Part 1, without a doubt, the inclusion rate is 66.67% times the 28% Companies Act rate at this stage. All right, so guys, slide number 26 is supposed to be a summary for you. And then if we finish off this topic by looking at the disclosure on slide number 27, no disclosure has been specified in IFRS 11. The same reason. IFRS 12 takes care of the disclosure. You can see IFRS 12, the second bullet, disclosure of interests in other entities. What are those other entities? Number 1, subsidiaries. Number 2, associates. Number 3, joint ventures or joint arrangements. Number 4, unconsolidated structured entities. So even if you find your previous special purpose entity, your SPEs or your SPV, special purpose vehicle, if you find those not to be consolidated, you must still go and provide disclosure. And that is the disclosure requirement we're going to be talking about in the separate lecture on IFRS 12. So I'll see you for that in the lecture on IFRS 12. And then just to finish off this lecture, the effective date is once again 1 January 2013, so already fully examinable for you guys. So that's the end of the lecture on IFRS 11, just to illustrate the principles. Ladies and gentlemen, is that enough for you to have an understanding, to be able to do everything regarding joint arrangements? The answer is no. You will now have to take your questions. You will now have to take your textbook and go and have a look at how they deal with joint operations and joint ventures. The purpose of this lecture was more to help you to distinguish between the two, because the accounting treatment for groups, for associates, for joint ventures and for subsidiaries, that is dealt with properly with lots of examples in your group statements textbook, so make sure that you use those. I hope you enjoyed the lecture. See you for the next one.